Bitcoin is also driven by global liquidity, but it's also the adoption of this new technology, which puts it in this stupid exponential secular trend, but with volatility. Bitcoin had a very complicated 2021, but what we're doing now looks very similar to the 2017 post-election for Trump.
Bitcoin Zella stands out with its simplicity and clarity. We've crafted an experience that anyone can dive into, whether you're a crypto expert or just a new to the crypto world. Now guess who keeps his eye on us? The author of best-selling book Rich Dad Poor Dad, Robert Kiyosaki. And we want to take this opportunity and thank all the people who trusted us, and we read every comment. And the best part, it's free. Subscribing now means you will get all new information for free. Don't just follow the trends, stay ahead of them. Subscribe to Bitcoin Zella today and enjoy the new edge. Raoul dives into Bitcoin's market outlook, its wild volatility, and price predictions. It also unpacks Trump's economic priorities, contradictions, and overall strategy. Let's watch him break it all down.
This year, we've already established is a liquidity positive year. In fact, a very big liquidity positive year because you need to roll all of this debt. So generally speaking, it should be a very good year for cryptocurrencies. However, we're in this period where the Federal Reserve and the Treasury, and because of the dollar, have tightened liquidity over the last couple of months. It's forward-looking, so it's affecting cryptocurrencies right now. So they've been soggy for a while because liquidity was tightened a while ago. But again, our expectation is, it shouldn't last that long in price or time. And then we've got liquidity all the way through this cycle. Now, if we go back to 2021, the prior post-election cycle, because the pandemic had seen the global economy go down to zero, then go straight back up again, the business cycle peaked really early in April 2021. Normally in these presidential election cycle years, the business cycle peaks towards the end of the year.
Bitcoin slipped below the $100,000 mark amid renewed trade war tensions that unsettled the market. The digital asset had rebounded sharply after news emerged that U.S. tariffs on Mexico and Canada would be delayed, and optimism soared when President Trump signed an executive order to create a unique sovereign wealth fund. However, the progress was halted when China retaliated against U.S. tariffs by targeting oil, coal, and other key commodities. According to data from Cointelegraph Markets Pro and TradingView, Bitcoin's price dropped about 3% shortly after the daily open, prompting concerns over further volatility. Experienced trader Joe noted that the day would be unpredictable, while analyst Michael Van de Poppe pointed out that Bitcoin's resilience might pave the way for new all-time highs if the price stays above $93,000. In addition, a rare negative funding rate on Bitcoin futures has been seen for the seventh time this year, a development that Axel Adler Jr. from CryptoQuant views as a bullish signal. With mixed signals from both geopolitical events and market indicators, many remain hopeful that the worst is behind Bitcoin as it edges toward historic milestones. Investors remain vigilant, eagerly anticipating Bitcoin's rebound and future market gains.
I am not an inflationist. The business cycle, when it picks up, will create some inflation again because oil prices will eventually rise and stuff like that. But I'm not an inflationist. There's two different things going on. There's debasement of currency that inflates asset prices. That's continuing. Inflation itself, I see less so. And all I see ahead is a tsunami of technology that is so deflationary we can't get our heads around it. So yes, we will get business cycle inflation. Where will inflation end up in this cycle? I think it ends up below 2% and then picks up again and maybe gets to 4% and then comes off again. So I'm not wildly concerned by inflation, but as we said, those prices won't fall. So we've still got that issue. But if I look further ahead, I think this is maybe the most deflationary period anybody's ever lived through because of robotics and AI. It's we're creating infinite people, or people in inverted commas, at zero cost. I mean, Amazon now employs more robots than people. So they're the largest employer in the United States, I think, outside of the Postal Service, or maybe the largest employer. But they have more robots now, and the robots work 24/7 7 days a week, never complain, never take a tea break.
That is a great stat. And they never go on strike either.
Exactly. They never complain, don't have any HR issues, nothing. And so, look, if you step back, it means that everybody is economically incentivized to use technology as opposed to people. That's a fact. So go to a Tesla factory, it's all robots. Go to any modern factory. So even if the re-onshoring of manufacturing in the US, a big Trump thing, they're not going to employ people. It's not the 1950s anymore. This is a very, very different world where nobody employs people if they can avoid it, because technology is so much cheaper and more effective.
We are living through fascinating times.
Yeah.
So I'm going to get your thoughts on the 10-year, okay? And it's been very strong. The yield's gone from 360 in September. It's up to 460, 470 now. And this is in the face of 3 cuts by the Fed. What is this telling us? Are you concerned at all about the 10-year yield climbing?
I am, because it's tightening financial conditions. It is also decoupled from inflation expectations, so it's not about inflation. So what is going on is every 4 years, all of the major governments around the world have to roll the debt. Now, it's this 4-year cycle, something I call the everything code cycle, because in 2008, there was a debt jubilee of where they reset interest rates to 0. All of the governments, therefore, didn't have to pay interest for a while, so it was a break on interest. So it was like a debt jubilee. It's like, don't worry about it, guys. Don't pay your interest. Sort out your debts. They all restructured their debts into the 3 to 5 year sector, and so 4 years being in the middle of it, and it's created this perfect cycle that's been happening since 2008. What has happened this time around, because we had the pandemic inflation, it's been very late for them to cut rates. Normally, in this point in the cycle, they would have cut rates back down to trend rate of GDP growth, let's say 2%, but they couldn't. So what's happening is the debt is now compounding into new debt because they're issuing new debt to pay old debts. And so what you've got is a tsunami of debt that's happening, which is why they need to get interest rates down. So it's that dynamic that's causing it, is the issuance. Something will give at some point. Either the governments are going to have to stop it, because everyone's got the same problem, and the UK interest rates just hit it was like a 30, 40-year high. You know, it's unsustainable in highly indebted economies. So they're all going to have to do something. Now, whether it's a yield curve control idea, which is they kind of, as opposed to forgiving all the debt payments, they say, we're going to cap interest rate on government debt at X%. Or you have to do QE, but certainly what they're desperate for is to add liquidity into the system. There's a tightness of liquidity that stops people buying the bonds, which is why the excess issuance isn't being bought. The other issue is the dollar's too strong. So it's expensive for the Japanese and the Chinese and the Europeans to buy US government bonds. So again, it's another reason they've got to get the dollar lower, got to get the rates lower. And then I think it'll free up the 10-year. Trump has already said interest rates are too high. And I think Scott Bessent's first job is to figure out this particular mess.
Ethereum surged past $2,900 following a wave of positive momentum, fueled in part by Eric Trump's public endorsement of Ethereum. The son of former U.S. President Donald Trump took to X to tell his 5.4 million followers that it was a great time to add Ethereum. Though he later edited his post to remove the phrase, "You can thank me later," the message had already made its impact. His statement came just as the crypto market was recovering from a steep decline triggered by his father's proposed tariffs, which had caused Ethereum to nosedive 16% in a single hour to a low of $2,368. Before Trump's post, Ethereum had already begun rebounding after Donald Trump temporarily paused tariffs on Canada and Mexico. That relief helped the market regain confidence, with Ethereum climbing back to $2,700. After Eric Trump's remarks, Ethereum's price briefly touched $2,913 before settling around $2,806. Meanwhile, the Trump family's World Liberty financial platform made significant crypto moves. Blockchain data reveal that the company transferred over $307 million worth of assets to Coinbase's custody platform. Additionally, The OLF unstaked nearly 20,000 Lido-staked Ethereum and spent $5 million in USTC to acquire 1,826 Ethereum at $2,738 per coin. Analysts speculate that these funds could be used to support OLF's earn and borrow lending protocol, which has yet to launch. Beyond short-term price movements, Ethereum's long-term trajectory is also evolving. The Ethereum Foundation recently announced it would allocate 50,000 Ethereum to staking, aiming to generate rewards that could sustain the organization's budget, while reducing selling pressure on the market. Ethereum's institutional presence is also growing, with firms like Etherealize launching initiatives to promote Ethereum investment on Wall Street. As institutional interest increases and market conditions stabilize, Ethereum's future looks increasingly promising. If you've been with us so far, a big thank you. Don't forget to subscribe for free to Bitcoin Zella for your daily news. The link is waiting below. That's all for today's crypto news. Stick around for more updates, insights, and analysis on cryptocurrencies. Share your thoughts in the comments, like this video, and subscribe for more exciting content. If you've been with us so far, a big thank you. Don't forget to subscribe for free to Bitcoin Zella for your daily news. The link is waiting below. That's all for today's crypto news. Stick around for more updates, insights, and analysis on cryptocurrencies. Share your thoughts in the comments, like this video, and subscribe for more exciting content.